What's up, gang? I hope y'all was in your bag last week. I was out on a cruise. I wasn't able to be here with y'all on YouTube, but I got you this week. In this video, I'm gonna give you the layup for a play tomorrow that I'm doing. I'm doing a trade to the bullet side with Apple. So I'm gonna give you a little lessons, and tomorrow I'm gonna walk your hand. Tomorrow I'm gonna hold your hand through it. I'm gonna walk you through the process. Don't worry. If you're new to this channel, make sure you like and subscribe. This is the best trading channel out there. I give you the play the day before, and then the next day I walk you through the play. I give you education on the regular. So that's what I'm gonna start out with before I even get into the play. So on the education note, what I'm gonna go over is gaps. How gaps are started. Gaps are started so the stock market opens at 9:30 and it closes at 4 p.m. Any movement of the stock before the stock market opens. So first I'm gonna show y'all what a gap and go is, right? I love to trade at the beginning of the day because that's when the gap and go is present. And what the gap and go is, if you can see right here, this big old gap right here, what that is all up in this area here is the movement that the stock made before the stock market opened. So the stock market doesn't open until 9:30 a.m. But pre-market, the stock can go up, it can go down. So usually when it does that, it bounces in that direction that it went up. So in this area right here, in pre-market, the stock was going up in pre-market, and as you can see, it continued. If you was to do a trade, all you would have to do is ride this big candle up and you could close out for the day. That was probably a 15-minute, 20-minute trade, and that would have actually been the best. That would have actually been the best trade right there. That would have been the best trade of the day because the stock didn't get any higher than that. So you just made a killing in 15 to 20 minutes on that one candle. So that's a gap and go. Let me clean this up for y'all real quick. So that's a gap and go. But there's also a flip side on the gap and go, right? Because gaps are usually filled the same day or the next day. So in this situation where we have this gap, usually it does a gap and go, but it can also come down to fill this gap, because gaps usually get filled in the same day or the next day. So a market open, if it is doing a gap up, you want to at least wait like a couple seconds just to get that confirmation to make sure that the stock is going up. Make sure you place in a stop loss for security and just keep your eyes on it. But usually a gap and go is going to continue to go in the direction that it started going in pre-market. But that's not always the case, so keep your eyes open. So this is what I mean by gaps getting filled. So it did the gap and go after pre-market, and this was the trading day. This was the trading day right here. So this was one day right here, and then this was the next day. It did the gap and go. It did not cover the gap. It did not cover the gap. It came close to covering the gap right around here, but it didn't close the gap completely. As you can see, there's still a little bit of area of gap right here. So when the market opened on this one, it looked like it opened somewhere around here, and it shot down to close that gap. That's the gap and the go. Remember, gaps get filled within the same day or the next day. But I usually wait a couple seconds because it can. I usually wait a couple seconds because being that the gap and go is real common. It can fill that gap real quick. So that's the gap and go. I'm trading with Apple on Monday, and as you can see, we got a nice gap that needs to be filled from Friday. On Friday, this gap was not filled. So I expect this gap to be filled. But now let's go into patterns, right? So we got this cup pattern right here, which is a bullish pattern. Sometimes I'll give y'all somewhere in the corner here. I'll give y'all a example of the cup pattern. But you also have the cup and handle. So with the cup pattern, usually right here is where it can continue to take off. But you also have the cup and handle. The cup and handle flares out like this before it takes off. Now, if in pre-market it doesn't do a gap up, then you know that it's probably gonna continue that cup pattern. But if it doesn't go anywhere pre-market and the price stays right about here when the stock market opens, that means it's probably gonna do that cup and handle. So you gotta look out for that too. All right, so usually when I'm looking at a stock, the first thing I look at is that gap. I look at that gap, especially if that gap hasn't been filled that next day. So it's time. It's time for this gap to be filled. But now, how do I know when to get out? So I'm looking for my levels of support and resistance. So I got let's see levels. I usually do at least 2 to 3 different levels. And what I'll do, I'll draw it out on the chart. And on trading day, which y'all see tomorrow, y'all see levels in my chart when I'm doing it live. And I just leave it on the chart. And if it seems like it's gonna bounce down off of that support, off of that resistance, then I get out of the trade. If it busts through resistance, then I stay in the trade. But you know what I'm saying? I gotta set everything up so I know what's happening and what I'm gonna do going forward, right? So, all right. So now we're gonna look at some levels of resistance and support. So this looks like a strong level. This looks like a strong level of resistance. It looks like a strong level of resistance or support right there. So that could be a level of resistance. But since I'm expecting it to fill this gap, I feel like it's gonna pop through that one. We got another level. Or more like this. We got another level cross here. Let me get this up out of the way. I like to keep my charts clean. You know what I'm saying? Don't want it looking all crazy. So that looks like a level of support. Let me get rid of this gap explanation right here. So boom, this candle. So look at this resistance right here. This candle come down, it stopped at that level. This candle, these 3 candles came down, stopped at that level. Now it did break resistance. Resistance and support can be broken, so you got to pay attention to that too. When resistance, when support is broken, then it turns into resistance. But you can always break through them levels at any time, but you use those as additional confirmations with your patterns, with your moving averages and all of that, which I'm gonna get into some moving averages and other stuff like that in a second. So I went over the cup. With y'all. I like this bullish action right there. It's looking like the 3 white soldiers, but it's probably not the 3 white soldiers now that I look at it. If you're not familiar with any of these terms, look them up and keep watching my videos. 3 white soldiers is something you can look up on the internet, and these are patterns that you gotta know, you gotta pay attention to. So when you see them, you know how to make your moves. So we got the patterns. Let me look for another level. Since I expected to hit that gap, The real level I care about for real, is this one. That's a strong level of resistance. And it looked like that one is about 191.70. So 191.70 is my first place of exit where I plan on exiting. I expect this thing to get all the way up to here. And that's my first place of exit. Well, no, not the first place, not the first place. First place of exit is 191.20. Because I expect it to fill the gap, and it could bounce down after filling that gap. So 191.20, 191.70 is the next level if it breaks through to 191.20. And then after that, my last level would be right here, right above 192. Y'all can screenshot this if y'all gonna do this trade tomorrow. Screenshot this, or even just, you know what I'm saying, save it in your phone and rewatch this multiple times. Go over it with your trading partner, whatever it is, because it's a lot of free game I'm giving in this video. All right, so I gave y'all the levels and all of that. Now I'm gonna go over some additional indicators, what I look at when I'm looking at a chart. I usually go to Yahoo Finance. I'll put something somewhere on the corner. I go to Yahoo Finance, and on Yahoo Finance, I see what they think about the stock. What they think the stock is going to do the next day, within the next 3 months, 2 months, 4 months, whatever the case is. Then I look at the fear and greed index. I want to know where the market is. If there's more fear in the market is going down. If there's more greed in the market is going up. So that's another thing I look at when I'm doing my trades. I like the MACD indicator. I like the FSTO, that's a stochastic indicator, whatever it is. I always look at the MACD, I always look at the stochastic, and I always look at the RSI. The MACD indicator is usually at the bottom, and it kind of makes a wave up above and under a particular line. That kind of lets you know the trend of how that's moving, right? The stochastic and the RSI are kind of the same as far as monitoring them. Like if the RSI is anything below 30 and below, is too bearish. If it's 70 or higher, it's too bullish. So if it's right around the middle, and you expect the stock to go up, that's a good indicator. Or if it's down below, closer toward that 30 level, and you expect the stock to go up, that's additional confirmation. So the RSI is basically identifying if the stock is overbought or oversold. Overbought at 70, oversold at 30. If I didn't say it before in this video already, I'm trading with Apple to the bullish side tomorrow. I'm gonna do the trade live. I'm gonna walk y'all through it, but it's not a guarantee that I'm gonna do that. Remember, pre-market is gonna give me confirmation on my trade. Hope this was helpful, man. Y'all get out there, get in your bag. Don't worry about it. I'm gonna do this trade live, and then tomorrow evening, I'm gonna do the trade live in the morning, and then tomorrow evening, I'm gonna talk about it a little bit more, and then talk about it the next day.